Welcome everybody. Welcome everybody to the June 2024 WITI LinkSV event, where we look at where the money went last month, in this case, for the first half of the year, and what a year it's been. And I can't believe it's July already. Don, I mean, pretty crazy. We're already halfway through the year. And with AI, we're moving at the sound of AI or the speed of AI, like I like to say, but I'm gonna send it over to you.
Thank you so much, David, and welcome everyone. I also can't believe it's already July. It's I know time is supposed to go faster as you get older, but this is ridiculous. So let's talk about our first half in June. So in June, we saw a little bit of it was a up, but a drop from what we had expected. 3.9 billion. So less money, less companies. Even when we take out the big 6 billion in May to XAI, we were down from where we would expect to be. But year to date, we're at 34 billion, which is above where we were last year, and sort of on track for a 68 billion year, which puts us look about a little bit more than 2/3 of the way between 53 and 73, 23 and 22. So things appear to be slowly going back to a pre-COVID, pre-crazy 2021s in the funding arena. So let me, well, actually, I want to go back here for just a minute.
Just a question, Dawn, are you sharing?
I'm seeing it, Holly. You may
Okay,
have...
then don't mind me then. Thank you.
So what did we see in June that was different? We saw larger deals. We saw less deals, but surprisingly, we saw a increased median valuation. Now, that was a surprise because valuations have dropped tremendously over the last year. And as a matter of fact, a lot of the companies that got funded in 21 have not come back to do funding since then because their valuations, they would have to take a big down round. But valuations ticked up, median in everything but growth in the month of June. So that's a positive outlook for where we're going.
Don, could valuations be up, but term sheets have ratchets and multipliers on payouts and other things that make it's like, sure, we'll give you the valuation, but we're going to get 10x our money out, so on and so forth, all those good things.
Well, there's two sides to that. The valuations, one side of the valuations being up is that funding is a lot harder to get, and the companies that are getting funded are much higher quality overall than you saw in 21. Now, the other side of what you just mentioned, almost all the term sheets are very investor friendly. And that means there are liquidation preferences. That means they're protecting themselves in ways they did not or could not in 2021 because there was so much competition at that point. Apologies, I hit the keyboard. Shame on me.
Did we see that big jump, Don, in 2021? Because was 2020 just real dead because of COVID? So then there was some kind of makeup in 2021?
Well, in 2018, 2019, and early in 2020 were what we would term normal funding years. Late 20 and all of 21, it was COVID, it was crazy time. It was primarily driven by zero interest rates. And all of a sudden with zero interest rates, what we call alternative investors, and this is PE, this is family office, these are groups that never before had played seriously in VC, were all in trying to get their share of the up and coming startups dollars. huge competition, and it got to the point where VCs were literally not doing due diligence. I mean, everyone knows the FTX story. They didn't even have a board, much less basic investor protections. But that was more common than you would expect. And the other thing that happened in 2021 is investors out here in Silicon Valley reached the understanding they did not have to see and touch you to invest in you, right? Zoom call. That was a sea change in Silicon Valley. And over the years, the last 3 years, we've seen VC migrate out over the country as a result of that. Okay, I've sort of lost my back
Yeah.
to Michael's comments. Yes, all fundings right now are very investor friendly, and the valuations. The one point on the valuations being high that I didn't mention that is worthy of mention is that there are 2 or 3 big deals in the month of June. We're talking 6 billion, 18 billion overall in around the country that drove median valuations up. We'll see July, August, and really probably not fully until September where things are going to settle out to. Okay, so just other points on funding. Exits continue to be low. There have been 6 tech IPOs this year, which is a fraction of what there usually is. The liquidity for VCs is just not there. So you see a lot of the venture capitalists, and you see this in private equity too, turning to secondary sales to get some liquidity to give back to their LPs. And needless to say, LPs are not re-upping on new funds. It's really hard right now for VCs to raise new funds. The ones that have done it, the big established ones, can go out and do it. The new emerging managers, particularly those that did their first funds 21, 22, are having a really tough time second time around. Let's see, billion interest rates. And on the M&A front, Michael, as we talked about before, a lot of small companies are having to resort to having others buy them because they can't get their next round of funding. So we see a lot of small M&As, and that is helped by the fact that the public markets have been so good. Big companies have lots of money to buy the little companies. However, that hasn't led to a lot of liquidity because the large M&A, like Figma, for example, has been tamped down by regulatory gotchas. So just all across the board, liquidity is down, and that means that new money is harder to raise, and that means that there's less dollars out there for the startups that are looking for money. Okay, that was a little bit of an extended chat. Let's move on. For June, the one thing that stood out was lots of money, and these are big deals going into clean tech. We'll look at where they are in particular, but easily 2 to 3 times what we usually see in clean tech. And these are most of these are later stage rounds. These are companies that have proven their propositions and are now moving into production or partnerships, as the case may be, depending on whether they're technology or product based. Let's take a look now real quick. Overall, the 3 biggest investors we saw, most frequent investors we saw were 3 in June. Breakout Energy Ventures, no surprise from the funding you saw for clean tech. They participated in 6 of the companies this month. Y Combinator, of course, is always up there. And Lightspeed Venture Partners was also present in 5. And we had 3 angels, Nat Friedman. These 3 names appear every single month in angel investments. And if you're out there looking for money and get any of these three interested, you will find yourself easy to fund. We did a quick overview of where investors were investing, which investors were investing where, and it was rather interesting. Just one point, and I'll let you look at this on the slide deck later at your leisure. Where we saw multiple investors investing in multiple companies, clean tech, a little bit in fintech, and that was about it. It was an interesting month. In the area of biotech, where we usually do see the same investors picking up on multiple deals, we did not. 93 different investors on the 842 million that went into biotech last month. So mega deals made up just under 2 billion of the 3.9 billion last month. And just to touch briefly on it, you'll get details on all of these and links to the companies in the recap notes. A lot of the, if you look at this, most of the mega deals went either biotech or clean tech. And out of the clean tech fundings, we had two huge 300 million plus deals, one smaller one, and then in biotech, same thing. Now, not in clean tech to the same degree, but in biotech, AI is now really driving additional expansion, additional fundings. Not to the extent that you see AI applications, but it's being used to build out new drug discovery platforms, to build out new genetic discovery platforms, and so on and so forth. We'll look at a little bit more on each of these companies as we go through. Well, this is a double-edged sword too. So we had a tick up in the funding that went to women-led companies in the month of June, 426 million, which put us almost up to 11%, as high as we've been all year. That is largely due to, when we get to the details on the women-led companies, later stage fundings. We had 4 Series B and Series C, large, many millions of dollars fundings. That's what drives this up. Out of 16 companies, there were 10 of them that were seed and pre-seed. There were 6 that were further along. Okay, mini rant. Nationwide, from PitchBook, on their first half of the year review, we achieved the 2.2% of funding for female-founded companies. Crunchbase last month put out an article talking about how 23, we did 27% or 23% funding to female-founded companies. This is an instance of using the wrong numbers and coming out with the wrong conclusions. When they say female-founded, they literally are saying anyone on the founding team is a female, will include you in this group. So yes, they did way upwards of 20% in 23, because you had some large fundings to companies like Anthropic that had a female funder. But the woman on the team was not the CEO, and it is the CEO that typically closes or doesn't close the funding with VCs. So what we track here is women-led companies. That could be a founder, or could be a woman who's brought in as a CEO, but only if the woman is a CEO and the company is founded do we include them in this number. So any number that you hear countrywide that's above the 2 or 3%, just not valid. And remember that.
And I'm sorry, Dawn.
Go
Real
ahead.
quick. So no Anthropic, it was a brother and a sister that founded it.
Right.
I wasn't sure if they were 50-50 partners. I'm assuming they probably were. I'm sure they've gotten diluted quite a bit, but so
Yeah.
what did they make the list or no?
Yeah, they made they were
Oh, they did.
included in the list of companies that are female founded.
Got it.
She left the company.
Oh, she did.
She's not involved in its executive team. So again,
Interesting.
David, I had a spirited argument with someone over at Crunchbase on this, and they their premise is that if there's a female founder anywhere on the team, that means that we're doing better on funding women. I vehemently disagree.
So they're trying to juice the numbers at Crunchbase.
That could be
One night.
heavily skewed towards the marketing role
Yep.
in tech. Often the CMO, a lot of the CMOs are women. So
Absolutely true. A lot of the HR people, chief people officers, Bob would tell you that they have made great strides in legal, in CHRO, human resources, and people in marketing, and they do make up maybe even a majority of those roles that we see anyways coming through. But the CEO role is the critical one for funding. And that's the
Yeah.
one that I recommend you pay attention to when you're looking at how many companies that are women-led are getting founded. Does that answer, David?
Yeah, no, that was good. Thank you, Don. I just yeah, I kind of spaced when you said about Anthropic. And I did just see her. Yeah, she seemed very sharp. I saw her, both of them, the brother and sister, speak at the Bloomberg conference. But now that they're so big. It's
Yeah,
interesting.
yeah.
Thank
And sometimes it's just a token woman. Sometimes it's a woman who's very involved. But again, woman has to be the CEO to make a difference in the funding.
Got it.
Okay, so women-led companies, we had 16 out of those, 5 of them had significant raises. And here's your 5. We've talked about Demiguo before, Pika. David, I think you said you tried that video platform.
Yeah, Pika, yeah. I did play with Pika. I confused that with what was the fire one? The ones that uses AI and
Oh,
drones.
Fireworks AI.
I think that was Pana. No, the one that uses it for forest fighters. That was Pana.
Yeah,
They were on,
Pano, you're right,
right?
Pano.
And that's a woman founder too. But no, that's right. Pika's good. I'm glad to see they got their Series B and are still going.
Yeah, they're going great guns. They no slow down there. They're one of the ones that's mentioned when they talk now about new frontier models coming out. Are they going to be threatened by advances by, your Google, your others? But
Right.
they were convinced enough, or they convinced their VCs enough that 80 million more to build on. Down in the lower left, Julia Bornstein. This is a serial entrepreneur. She's done 3 companies before, and her team has worked with her before. That's the kind of team that you'll see getting a $50 million seed, which is very unusual, very big amount for a seed, and particularly in the e-commerce arena. But there you go, generative AI combined with e-commerce, they're going to produce a new journey. Caitlin Miller. This is the first company, or one of the first companies, that's coming out of the Stanford Innovation Accelerator. And this, again, the advances that are happening that don't say AI, in case the two-step therapeutics, this has got AI underneath it. So they may not be saying it, but it's still there. Gail Shepard, 106 million C, robotics. Hannah Sieber, again, a serial entrepreneur, but she caught my eye because she's done something unusual, which is to take what seems to be a low-tech industry, shipping refrigerated goods. If anyone has ever received medicines via shipment, my father used to receive intravenous transfusions when he lived with us. We'd get a bag refrigerated, packages filled with refrigerant, terrible stuff. Generally not reusable either. So she went in there and is now providing these reusable containers that IoT tracks. They're electrified, so there's no refrigerant involved. Maintain a standard temperature. You know, good for power, good for the environment, and cheaper for her customers. What a great combination. Okay, and just a few other companies that caught my eye during the month. Cyberhaven. Again, these cybersecurity right now is one of the areas that is easier to fund than others. And Cyberhaven coming in with a Series C. This is data security. On the other side, Molten Industries, part of that big clean tech funding. And I can't explain to you what they do, but you can click through on them and learn more from the recap notes. And I'll say ditto on that for Prolific Machines. This is fascinating stuff, but they're actually using light to produce essentials. How they're doing it, again, I'll let you click through and learn more about them. But this is this new technology that is always fascinating to see. Spike Technologies, great example of a company that is in the IoT space that is putting together APIs, data as a service, the kind of thing that's been done in SaaS for ages and ages, but on a software, not an IoT level. They're bringing that right over to medical devices. I don't have to say much about radiant oximetry, except to say, boy, anything we can do as a country to improve the health of women in childbirth, where we don't rank very well in the world, great thing. Those folks have 2 medical devices now targeted towards monitoring fetal oxygenation and preventing C-sections. And last but not least, this leads us right into AI, Etched. So this is a brand new ASIC. This company got 120 million Series A because what they've developed is it's a new chip specific to transformer algorithms. So this chip works only with transformers. And as a result, because it's optimized, it's 20 times faster, it's less power than the current H100, about 10 times faster than their next generation. This is a huge thing, not just from the perspective of providing alternatives to NVIDIA from a chip level, but the power requirements that are being driven by AI are actually a little scary when we look ahead, even a year. All of our advances in clean tech, or many of our advances in clean tech, carbon emissions, are being trashed by the need for power, the expenditure of power for AI. Anything that brings the need for power down is a great thing. This is early testing. It won't go into full production until, I believe, the end of this year. But great advance. And before we get to this, just a couple of other items they're in the recap notes. One of the more discouraging things over the last couple of months has been the backward steps we've taken on women being funded. There's a small group called Fearless Fund, East Coast, that started out to fund Black women with small amounts of capital, $20,000. They got threatened with being sued. They turned those fundings into grants. They were sued anyways. And the courts have now said, well, this may be a violation of equal rights. And they've been enjoined against funding women further. Watching the VC come down, or the VC going to women, not increase, and listening to a variety of DEI rants from certain CEOs in the Valley, very disheartening. We're not going in the right direction in this way. I gave you a couple of examples in the recap notes, but I think we all have to remember that don't take it for granted. We have to continue working and pushing forward because right now our country is not making forward progress with women in the areas we'd like it to. Okay, that's the end of my rant. So Pulse of the Valley, that's our newsletter. And the information we put into each of these presentations comes from the work we do gathering information, tracking in the Valley on it. I plugged a couple of links. You can connect with me, connect with our company, follow us on LinkedIn. And I will plug in a link to sign up for the free version of Pulse of the Valley if you're interested in that. We also now have a entrepreneur membership program. Gives anyone full access to our data for $6.99 a month. It's part of our desire to help entrepreneurs get started. And as part of that, we also now offer fundraising services, starting from free at the database level, being able to access all of our companies, look at the investors, see who is investing for what, both angel as well as institutional, and right up to a fundraising service in which we help companies identify likely investors. And on that, one more click here. I hope we see you next month. And David, I'll turn it back over to you.
Thank you, Dawn. Amazing as usual. I think, and the reason we do these sessions, is these are the companies, for those of you looking for opportunities, these are who we should be targeting, right? When we see these job postings come, when we see the funding, these are companies we should be looking at before they open up job postings publicly. I think we do have a special WITI membership promo we just promoted yesterday, so keep an eye out for that. And right, companies we should be doing business with, investing in, keeping an eye out for. I think this is all great info, Don. So let me stop the recording in
Thank you, David.
case we want to, we can talk about Bob.